A stock that we've been building a position in over the past few months is, iconic company GE, General Electric, one of the original members of the Dow, but it managed to get itself kicked out recently. Look, we think it's got a chance of coming back in one day. It is, GE. I think there's a lot of noise around the company about, and we think ultimately you've already gone through a very big restructuring of GE. The reduction in the size of the finance business has been enormous. I mean, it's really shrunk itself down to simply being a aircraft leasing business and an insurance business in runoff. The main value of GE is the world's leading aerospace engine maker and a leading healthcare provider of healthcare equipment. And it has a gas turbine business. Gas turbine business today is on cyclically low earnings, only represents, I think, roughly 15% of profits. So really, and we believe the gas turbine businesses actually can recover, because as anyone who follows Antipodes knows, we're very constructive on the structural demand outlook for gas as a base load fuel to substitute coal in places like Europe and in China. Mm-hmm. And I think investors are just missing the fact that there's a significant recovery in carbon prices in Europe. European regulators have essentially fixed the carbon market, and we benefit from that via companies like EDF, who are the leading carbon-free generator in Europe. But coming back to GE, in a market where structural growth is what all investors want, and it's as a style bias, it's about 3 standard deviations expensive. You've got one of the structural growth companies in GE. Aerospace, air travel grows at a multiple of GDP. Engines are the key component that drive that, because it's engine technology, and the efficiencies that are gained through upgrading engine technology that drive, fuel efficiency drives the affordability of air travel. So GE is the key enabler of international air travel, and you can buy that business today at we would argue, just doing a simple comparison, sum of the parts comparison, and we think it's trading at about a 40% discount to a simple sum of the parts. And I say simple because this is actually now a very simple business. Aerospace, healthcare. You've got a bunch of other smaller businesses, but they're all they're all in very good market positions. So I think that's, and it strikes us that some of the leading industrial conglomerates seem very cheap versus the pure plays. You could put Siemens in that bucket as well.